All right, welcome back in here to Live Now from Fox. I am Andy Mack. Let's talk a little bit about the economy and some of the New York Stock Exchange as several rate cuts to end 2025. All eyes on the Federal Reserve on their first meeting of 2026 and if they would cut rates again. And Jerome Powell did speak to the media as they left it unchanged. Let's be joined right now by Fox Business's Darren Botelho in Washington, D.C. at the White House. Darren, thank you so much for joining us here on Live Now from Fox. What can you tell us about what happened and what was said today?
Hi, good evening. Well, the central bank kept interest rates steady despite the president calling for a cut in interest rates. Fed Chair Jerome Powell, like you said, gave us some insight as to why the Fed did this, why they kept it steady, pointing at the tariffs.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy expanded at a solid pace last year and is coming into 2026 on a firm footing. While job gains have remained low, the unemployment rate has shown some signs of stabilization, and inflation remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy rate unchanged. Having lowered our policy rate by 75 basis points over the course of our previous 3 meetings, there's an expectation that sometime in the middle quarters of the year, we'll see tariff inflation topping out. So what we do is when a tariff is put in place, we track the effect of those tariffs over a 6, 7, 8, 9 month period, and you can see for that tariff how long it takes to reach a place where it's affected the price level.
And the Fed cut interest rates 3 times last year. The Fed is keeping the federal funds rate in the current range of 3.5% to 3.75%. That's the rate at which banks charge each other for overnight loans. So what does that mean for you, the consumer? The rate is then the benchmark for what they charge customers. When the Fed raises rates, for example, credit card interest rates go up. So in this case, your credit card interest rate should not be affected. Getting back to the president and the Fed, there's been an ongoing feud between President Trump and Fed Chair Jerome Powell, with Powell accusing the president of threatening suit and investigating him over the multi-billion-dollar renovation of the Fed Reserve headquarters right here in D.C. So the president saying the cost could reach $4 billion and calling this a disgrace. But Powell saying the price tag is $2.5 billion and accusing the president of trying to apply pressure to force rate cuts. The Fed will meet 2 more times this year before Powell is done in May. And of course, the president is saying he's going to put someone in place who is going to cut those interest rates. Back to you.
All right, thank you so much. And there were a lot of questions as now we're in 2026 and Jerome Powell will soon not be the chair of the Federal Reserve. Did he give any insight into what it will look like after he steps down from the chair, what it will look like post Jerome Powell?
Right, like I said, he's planning to put someone in place who's going to cut those interest rates, but the president can't directly affect the Fed. He just said he's going to try by putting someone in place that might be more favorable to those cuts.
Yeah, lots of questions that Jerome Powell couldn't answer today about that, about the dollar, about other different topics. Darren Botelho, thank you so much for joining us here on Live Now from Fox. All right, thank you so much. Our great conversation. We're going to get into it a little bit more here after this quick 2-minute break. What it means for the Fed, the stock market, and potentially a looming government shutdown. We'll have that and much more here on Live Now from Fox after this. All right, welcome back in here to Live Now from Fox. I am Andy Mack. The Fed Reserve remained and kept interest rates steady to begin 2026, which was not what they did to end 2025. Some 75 basis points over several different meetings that were cut. And we did hear from Jerome Powell earlier on today as they talked about this, leaving those unchanged. And the market was up and down and up and down again. Let's talk about what this means and what impacts are being felt right now. Let's be joined right now by MarketWatch. Greg Robb. Thank you so much for joining us here on Live Now from Fox. What was the biggest takeaway you heard from Jerome Powell, and why exactly did they make this decision to leave interest rates unchanged?
Well, the first question, I think I was mostly surprised about how upbeat Powell was about things. He said that the labor market seems to be firming, that the growth in the economy was on solid footing. So that was a surprise because, a lot of people I talked to and some of the data too doesn't look so good. So I thought that was surprising that he was upbeat. And what was your second question?
You answered it pretty much in full there. Let's move on to the other ones because we talk about some of what he said in terms of that and the numbers and what they dictate. He talked about tariffs as well, saying that. He talked about the government shutdown, as you can see a little bit impacts in the fourth quarter there, potentially with a looming government shutdown. Did he give any idea about that if we're in for another one?
Nobody wants another government shutdown, least of all the Fed chair. I mean, it just kind of gums everything up, but they lose really good insight of the economy. They try to tell us that they can really gauge the economy when the government's shut down, but I think the answer kind of is they can't. So they don't want to shut down. He didn't really address that today. It's sort of like everybody's nightmare scenario, so nobody really wants to go there. He just said that the economy is doing well and that inflation should come down in the middle of the year. So he was trying to peddle some good news.
And he also said something about tariffs that I found interesting because we have so many conversations and it has dominated that for the economy and tariffs kind of being intertwined so well. He did say that potentially the lingering impacts of tariffs have already been felt. What do you make of those comments?
I mean, it's remarkably dovish, I think. I don't think he's represents the way most economists on Wall Street think about these things. People are a little bit more worried, but the chairman is, he knows a lot, and I think he feels, and the Fed has felt from the evidence that these inflation risks. It won't be January, February, March. He's talking about June, July, and August. There's going to be a bump up of inflation at the beginning of the year, but then if you want inflation might recede after it's going to take one or two more punches and then recede. That would be really good news if that comes about, and then the Fed could cut rates again.
In 2026, it could be the post-Jerome Powell as chairman year. Of course, Trump is probably eager about that. He was asked questions he really couldn't answer about the transition to a next chair of the Fed Reserve. But did we give any sense, any insight into what it will look like after Jerome Powell is no longer the chair?
There's been so many remarkable developments on this front in the last 6 weeks. I mean, for one thing, the market all last year really thought that there's going to be a new Trump Fed chair in May, and that this new chair was going to bring down rates. And so almost no matter what was going on, the market was really happy that rates were going to be really low in 2026. But now here we are in 2026, and now the market is starting to signal the opposite. It's sort of saying, the yield curve, it's like rates are low on the low end, but rates are rising in the far end. And that's never good for anybody. And they're getting steeper. And the market is saying that if there's a new Trump Fed chair and he tries to lower rates, that the long-term rates are going to shoot higher. So do exactly the opposite of what they want to happen. So that's one of the things that's been stood on its head this year so far.
Yeah, it's interesting how some of the pendulum swings one way in a certain kind of tab, a current data point, but it goes in the other direction. Greg, anything else you want to note? Anything else that we're missing? Any takeaways from the day or an outlook? Because this is the first meeting of 2026.
Well, I think one of the interesting things is that it's on the political front. Powell had pushed back against Trump earlier this month. And now we don't really know if, most people say Powell won't be chair past May. Now there's an asterisk next to that. Powell might be chair past May because the Trump administration has started a criminal probe of Powell for that renovation. And Powell doesn't want to leave under a cloud. And Senate Republicans have said that they want that investigation over with before they put somebody into his chair. So there's a sense of who's going to be chair in May. That's something to watch.
Yeah, and he also was asked questions about Lisa Cook as he attended a potentially hearing for that. So lots of different facets with Jerome Powell. And like you mentioned, the big asterisk, if Jerome Powell will be there beyond May. That is obviously something we may not have expected in 2025. Greg Robb with MarketWatch. I appreciate your time, your insight. Thanks for joining us.
Thanks for having me.
All right, great conversation as always. The first Fed meeting of the year, remaining those interest rates unchanged. So we're following all of that very closely here on Live Now from Fox.